Here is a scenario that plays out thousands of times every single day across the United States. And there is a meaningful probability that at some point in your life, it has played out or will play out for you or someone you know. Someone checks their bank account and finds transactions they did not make. Charges from a merchant they have never heard of. In a city they have never visited. For amounts they certainly did not authorize. Fraud. Their card information was stolen, skimmed at a gas station, compromised in a data breach, captured through a phishing scheme, copied by someone with brief physical access to the card. The specific mechanism does not matter as much as what happens next, because what happens next is where the profound difference between a debit card and a credit card becomes impossible to ignore. If the compromised card was a credit card, the scenario plays out like this. The cardholder calls the issuer, reports the fraudulent charges, and the issuer opens a dispute. Under federal law and virtually every major card issuer's zero liability policy, the cardholder owes nothing on fraudulent charges they reported promptly. The charges are removed from the account. A new card is issued. The cardholder's available credit limit is unaffected. Their bank account balance has not moved. The money that was in their checking account yesterday is still in their checking account today. The experience is unpleasant and inconvenient. It is not financially damaging. If the compromised card was a debit card, the scenario plays out very differently. The fraudulent transactions have already cleared against the cardholder's checking account. The money is gone. Not pending. Not held. Gone. Withdrawn from the account and transferred to whoever perpetrated the fraud. The cardholder calls their bank, reports the unauthorized transactions, and now enters a process governed by Federal Regulation E rather than the credit card consumer protections of Regulation Z. Under Regulation E, the liability rules depend entirely on when the fraud is reported. Report within 2 business days and liability is capped at $50. Report between 2 and 60 days after the statement showing the fraud and liability jumps to $500. Report after 60 days and the cardholder can be held liable for the full amount of the fraudulent transactions with no legal cap. Their entire checking account balance, in the worst-case scenario, is at risk. And while the dispute is being investigated, a process that typically takes 10 business days and can extend to 45 days, in complex cases the money remains gone from the account. Rent is due. Utilities autopay. Groceries need to be bought. The car payment processes. All of these obligations continue with an account balance that reflects the fraud-depleted total rather than what should legitimately be there. The debit card fraud victim is not just dealing with the psychological stress of the fraud. They are potentially dealing with overdrafts, missed payments, declined transactions, and all the cascading financial consequences of suddenly having significantly less money in their account than their budget depends on, while waiting for an investigation that may or may not fully restore their funds within their own timeline. That difference, credit card fraud, leaves your bank account untouched while the dispute is resolved. Debit card fraud removes your money immediately and gives it back, maybe as the single most important reason to stop using a debit card for everyday purchases. But it is not the only reason. Not even close. Welcome to Klux One Finance. Let us go through all of them. The fraud protection problem we just walked through is the most acute and the most immediately dramatic difference between debit and credit cards. But the legal framework behind it deserves a clearer explanation, because most people have never read either Regulation E or Regulation Z and do not understand exactly what rights they have under each. Regulation E governs electronic fund transfers, which includes debit card transactions. Under Regulation E, your checking account is directly exposed to fraud the moment a fraudulent transaction clears. The liability caps we discussed: $50 for reporting within 2 days, $500 for reporting within 60 days. Unlimited for reporting after 60 days represent the maximum the bank is required by law to cover. Many banks voluntarily provide more generous protection than the legal minimum and advertise zero liability fraud protection for debit cards. But voluntary bank policies are not the same as legal rights, and in a dispute situation, the distinction matters. Voluntary policies can have conditions, exclusions, and limitations that legal rights do not, and the burden of proof in a debit card fraud dispute falls more heavily on the cardholder than in a credit card dispute. Regulation Z governs credit card transactions and provides dramatically stronger consumer protections. Under Regulation Z, your maximum liability for unauthorized credit card charges is $50 total, regardless of when you report the fraud. And virtually every major credit card issuer's zero liability policy reduces this to zero. More importantly, a credit card fraud dispute is a billing dispute under Regulation Z, which means the credit card company must investigate and cannot require you to pay the disputed amount during the investigation. The money never left your bank account in the first place, so there is nothing to be restored. You are simply not billed for charges you did not authorize, and the law is on your side in enforcing that right. The second major problem with debit cards is that they are quietly costing you money on every single transaction through a mechanism we have discussed in multiple previous videos, but that bears repeating in this context. Every time a card is used at a merchant, an interchange fee flows from the merchant through the card network. When you use a debit card, that interchange fee is significantly lower than what a credit card generates, typically between 0.05% and 1.5% for a debit transaction versus 1.5% to 3.5% for a credit card transaction. The lower interchange on debit means there is less revenue available to fund cardholder rewards, which is why debit card rewards programs are either non-existent or trivially small compared to credit card rewards. The cost of this difference accumulates quietly across every transaction you make. For a household spending $3,000 per month on everyday purchases, the difference between earning 2 to 4% back in credit card rewards versus 0% on a debit card represents 60 to 1, $120 per month, 720 to 1, $1,440 per year in rewards that are available on the credit card and completely absent on the debit card. The spending is identical. The financial outcome is dramatically different. Every debit swipe is a choice to receive nothing back from a system that would pay you something if you were using the right tool. The third problem with debit cards is the credit building opportunity that is being wasted with every transaction. Your credit score is built from your credit history, your accounts, your payment behavior, your utilization management. Debit card transactions do not appear on your credit report. They do not contribute to your payment history. They do not affect your credit score in any way. Every dollar spent on a debit card is a financial transaction that happens completely outside the credit reporting system, which means it generates no credit building value whatsoever. For someone in their 20s who is trying to build the credit profile that will determine their mortgage rate, their car loan terms, their apartment rental prospects, and their access to the best financial products for the next several decades, using a debit card for everyday spending is choosing to receive no credit building benefit from transactions that could be building credit automatically. The credit card used for the same transaction, the same grocery run, the same gas fill-up, the same restaurant dinner paid in full at the end of the month, builds payment history, manages utilization, and contributes to the length and depth of the credit profile that everything else in their financial life will be evaluated against. The transaction is identical. The credit building outcome could not be more different. The fourth problem is purchase protection and extended warranty coverage. The money leaves your account within 1 to 3 business days of the transaction. When you pay with a credit card, you have the full billing cycle, plus the grace period, potentially up to 51 days from the transaction date before the money needs to leave your checking account. This float is not hypothetical. It is real available time that the money can remain in your high-yield savings account earning interest rather than being immediately withdrawn from your checking account. For someone managing a budget carefully on a limited income, that float can also serve as a timing buffer that prevents overdrafts when the paycheck timing and bill timing create tight windows. A credit card purchase made 3 days before payday does not immediately drain your checking account the way a debit card purchase would. The credit card bill arrives weeks later after the paycheck has already been deposited, which means the cash flow crunch that would have occurred if the purchase had cleared against a low balance before payday simply does not happen. So what should you use instead of a debit card for everyday purchases? The answer, which we have been building toward throughout this video, is a credit card used with the discipline and payment habits of someone who treats it exactly like a debit card, meaning you only charge what you can afford to pay, you track your spending against your budget in real time, the way you would have tracked your account balance with a debit card, and you pay the full statement balance every single month before interest accrues. This approach, using a credit card with debit card spending discipline, delivers every benefit of the credit card system while eliminating every risk. You get the fraud protection. You get the rewards. You get the credit building. You get the purchase protections. You get the grace period float. And because you are paying the full balance every month, you pay no interest, which means the credit card costs you nothing and pays you back through rewards and benefits simultaneously. The practical implementation requires only 3 behavioral adjustments from someone accustomed to debit card spending. First, check your credit card balance with the same frequency you would check your bank account balance. Daily, if necessary. The credit card balance is your spending total for the month, and managing it requires the same awareness you would apply to a bank account balance that decreases with each purchase. Many credit card apps make this easy through real-time transaction notifications that ping your phone immediately after each purchase, giving you a running awareness of what you have spent that is actually more immediate than most bank account balance updates. Second, maintain a mental or written connection between your credit card spending and your checking account balance. The credit card purchase did not reduce your checking account yet, but it will. The commitment is real even if the cash flow is deferred. Keeping a simple running total of credit card charges alongside your checking account balance prevents the dangerous illusion that money spent on a credit card has not really been spent yet, the psychological trap. That leads people who intend to pay in full to find themselves at the end of the month with a balance they cannot cover. Third, set your credit card to auto-pay the full statement balance on or before the due date, as we covered in the interest elimination video. This automation ensures that even if life gets busy and you forget to manually pay, the full balance processes automatically and the grace period is maintained. Combined with the daily spending awareness practices above, the auto-pay full statement balance setting creates a closed loop where your credit card works exactly like a debit card in terms of spending discipline and budget adherence, while delivering all the protections, rewards, and credit-building benefits that a debit card cannot provide. The one situation where a debit card is genuinely the right tool is ATM cash withdrawal. Credit card cash advances using a credit card to withdraw cash from an ATM come with a cash advance fee of typically 3 to 5%, a higher interest rate that begins accruing immediately with no grace period, and no rewards earned on the transaction. For cash withdrawal, your debit card linked to your checking account is the correct and appropriate tool. Use it exclusively for this purpose. For everything else, every purchase at every merchant in every context, the credit card used with debit card discipline is the superior financial tool in every dimension that matters. The financial industry has spent years telling people that credit cards are dangerous and that debit cards are the responsible, safe alternative. That messaging benefits the banks that earn higher margins on debit transactions and pay nothing in rewards to debit card holders. It benefits the financial system that profits from keeping consumers in the dark about their rights and protections under each card type. It does not benefit you. The reality is precisely the opposite of the messaging. Used correctly, a credit card is safer than a debit card because it keeps your bank account balance protected from fraud. It is more financially rewarding because it generates returns on spending that a debit card never could. It builds something, your credit profile, that compounds in value across every major financial decision you will make for decades. And it provides a layer of consumer protections that a debit card simply cannot match. Make the switch. Set up the autopay. Enable the spending notifications. Track your balance with the same awareness you brought to tracking your checking account. And let the credit card do the work that a debit card was never equipped to do. Subscribe to Klux One Finance if you have not already. Hit the bell notification. Share this with someone who is still using a debit card for everything and does not know what it is costing them. And I will see you in the next one.